Okay, this video is the last in a series here. We had the first video where we created this spreadsheet using these transactions. The second video we created an income statement. The next one we did a statement of retained earnings, and the one just before this we did the balance sheet. And now we're going to do the statement of cash flows. The statement of cash flows is also for a period of time for the month ended here. And all we're going to do is we're just going to add up the money that was received from customers and paid for different expenses. And I've done a little bit of prep work over here. The cash received from customers was here. We completed maintenance, collected $850 in cash. That's here. We did some maintenance on credit. And then we received that payment. That's that $7,500 in payment. We did it on credit, did the maintenance on credit. That has nothing to do with cash, but we received that cash later. And then we completed some more work on credit, and then we received that payment later. And that's the last. We didn't receive any more payments. So it was $16,250 in cash. Is the receipt. I think that's the right number. Nope. Yeah. That is the amount of money we received cash from customers. Now we paid rent. We only paid rent one time, and I'll just show you this one. We just paid rent on June the 2nd. And all the other expenses have been paid for with cash. None of them were paid for using credit. So I'm just going to grab those a different way. But this is, we won't go through all the process of adding them up and everything. So rent, I'm going to put a negative in front of it there because it's money going out. This is $6,000 in rent. We paid for advertising $1,150, just grabbing the final balance. We paid for utilities $890. We paid our employees. I forgot to put the negatives in it. $1,650. I put minuses or negatives in front of them because this was cash outflows. And then we paid for the telephone expense. All those things were paid for with cash. This is the telephone. Okay. Oops. To get the right cell, it'll work, won't it? There we go. So we paid. Net cash provided by operating activities was $6,460. From investing activities, investing is usually long-term assets. Think of that. So the only thing we did for long-term assets was we purchased some equipment. We bought it on credit using accounts payable, but then we paid it off on June the 26th. On June the 26th, we paid that off. So we'll include this balance in the equipment account because it was paid for with cash eventually. Negative $2,400. And then finally, financing activities. This is usually long-term debt or transfers from or to owners, for example, issuing stock or paying dividends or paying off long-term debt or incurring long-term debt. In this case, no, we have an investment by the shareholder, just one, and it was in cash here. Get the right cell. And then we paid dividends. That is an outflow of cash, so I'm going to put a negative in front of it. Negative $4,000. The beginning balance then that gives us my net cash provided by financing activities. So the net increase in cash is a total of $130,060. Again, we change the date because this was for June, not for December. There was no balance in cash at the beginning because the company began with this month. Don't get confused. This transaction occurred this month. Before this transaction happened, at the end of last month, there were no balances in anything. So the balance in cash was zero to begin with. So the cash balance at the end of June should be $130,060. Let's go over here to the cash account, and guess what? $130,060. So that is the statement of cash flows. Cash flows from operating activities, in and out, received from customers, paid for expenses, basically. Investing activities, long-term assets that we paid for. If we had not paid for that equipment with cash, if we hadn't paid for that, that would not be an outflow. And then cash used for investing activities is issuance of stock or dividends. And there we go.